If you have been searching YouTube to try and find how to use fair value gaps in the market and understand them and actually understand them, this video is for you. I have took many trades with fair value gaps, including this one I took yesterday and this one I took today. They are such a simple tool in the markets with extreme confluences that you can add with them that I am literally going to talk about in this video to help you guys understand and to build your knowledge in the market so you guys can take winning trades every single day by using strictly one confluence. Literally, this watch alone was paid for by a fair value gap. It's super simple, and it is such an easy strategy to use in every single market, no matter if you trade Forex, crypto, futures, stocks, options. It does not matter what it is, you will succeed if you know how to trade fair value gaps. What is up, everybody? As you guys can tell from the intro, I am going to be doing fair value gaps, how to find them in the market, what to look for, what even is a fair value gap. I'll be going over this in the entirety of the video. Hopefully you guys enjoyed the intro and it give you a little bit more of a viewpoint on what a fair value gap really is. So like I said, I'll be going over it. And yeah, that's all I got for you guys. Let's just get into the charts and start working. So a fair value gap is, I just call it an FVG. Or I don't call it an FVG. It's a fair value gap. You can also call it, you don't call it that, but it's liquidity. And all it is one candle, two candles, no, bear with me now, three candles, and then this gap right here in between the candles is the fair value gap. And then you draw a rectangle, and then boom. I take trades with a fair value gap every single day. I took a trade with it yesterday, and I didn't trade today. This video is going to be uploaded on Wednesday, and I didn't trade today. But in the intro, it said I took the trade today, but that trade I took today was yesterday. So the trades I took these past 2 days, I was a big fuckaroo, whatever. These trades I took the past 2 days, I used a fair value gap. I'm going to tell you guys how to use them and everything. So what you should be doing is drawing this in your fucking notes, you dumb fuck. Anyways, put it in your notebook, write out FVG equals fair value gap, one candle, two candle, three candle, big fuckaroo right in the middle, draw a big ass rectangle. That's all you're going to do. Let's get into it. We're going to start out on the weekly time frame, and then we're going to slowly build into the daily and then the 1 hour, maybe the 1 hour. I don't really know. And then we're going to tell you guys how to actually take a fucking trade with a fair value gap. So right here, what's this? Boom. Fair value gap right here. How did I find it? Because I'm not special. No, there's such an easy thing to find in the market. So what is this? One candle, two candles, three candles. What is this gap in the middle on this second candle? You just put a rectangle over it. Fair value gap. You're a fucking Viagra Gimbo if you don't understand this shit. So what happens? Price goes into it. Price respects the fair value gap. Price goes back out of it. Keeps going higher. Now, you're probably like, oh my God, there's another fucking fair value gap right here. But guess what? It got disrespected. Yeah, it fucking did. It's called you delete it off your fucking screen and get rid of it. But guess what it did? It created another fair value gap. Holy shit. What does that mean? This little area right here is called BPR. So a BPR is balanced price range. I'm going pretty fucking quick, but it's pretty fucking simple. So hopefully you guys get it. Inverse fair value gap is just a fair value gap that got disrespected. I'll be going through all of this shit in the video because that's what I'm here to do. I'm here to teach you guys how to fucking use a fair value gap, BPR, fair value gap, inverse. Whoa. Anyways, that's what I'm here to do. So that's what I'm gonna fucking do. Anyways, inverse fair value gap. Let's get rid of that shit. Let's get rid of BPR. So what do we have right here? We have a bearish fair value gap right here. And you're probably like, oh, well, it's not the third consecutive candle. I don't give a fuck. Look at this. There's a hole in the middle. I'm going to fill that hole with my rectangle. And I'm going to just freaking burst it with liquidity. Anyways, what happens? Price goes back into the BPR right here because it inversed it, but then if it creates another fair value gap in the inverse fair value gap, it creates a BPR, right? It creates a BPR, okay? That's all it does, is creates a BPR when they intertwine. It's kind of like, I can't say it, but you can think it, and yes, it's true. It's just when they're intertwined, when they shouldn't be intertwined, and not good. Anyways, fair value gap gets inversed, BPR, price goes back into the BPR, goes up. A BPR is a lot more stronger than a fair value gap, and a fair value gap is a lot less stronger than a BPR, but a fair value gap is stronger than an inverse fair value gap. So let's go tier list. BPR is first, fair value gap is second, inverse fair value gap is third. This is how you rank them for which one you're going to want to take a trade off the most. That doesn't mean you don't fucking take a trade off of a fair value gap. It just means watch your ass if you're trading off of an inverse or a fair value gap. And then if you're trading off a BPR and you're wrong, you're probably just messing something else up because you're losing like a brain cell or, something like that. But anyways, that's the ranking system. Let's get back into this. Cool. Let's go down to the hourly time frame to go down to an even lower time frame. Cool. Let's try to find a fair value gap. Well, I found one right here. Let's just go this one. So we have that gap in the middle, right? Yup. Boom. What does price do? Price goes up. We have another fair value gap right here. Price barely touches in it, keeps going higher. But then as you can see, price goes back into the fair value gap, disrespects it, meaning what does that mean? It's an inverse fair value gap, meaning one, you either get rid of it or you keep it on your screen for price to go back up higher into it, but both of these times it never did that. And then right here, there's a bearish fair value gap, and what does price do? Goes up, goes down, goes up, go down, go up, down. Fair value gap. Now you're probably like, what if I got in right here? Wouldn't I have gotten stopped out? No, you wouldn't have. Because when you're ever taking a trade off of a fair value gap, you're going to want to put your stop loss right above the candle of what created the fair value gap. So if you put your stop loss right above the candle, you would have been 2 ticks away from getting stopped out, but you didn't get stopped out. And then, sure, let's just put your take profit down here. You would have taken a winning trade because your stop loss was in the right spot. You're not trying to put your stop loss right above this candle high because you still have more fair value gap to fill if price wants to go back up into that. That's not very likely, but yes, it happens. Just saying. So what happens right here? Let's go down. This is a great example of an inverse fair value gap. So right here, price breaks this fair value gap, goes back down into it, and as you can see, we have an inverse right here. So what does price do? Bounces in it, goes out, bounce, 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 bounce. Boom, up, down, up, back out. Cool. What is right here? Fair value gap. Price goes in it, price goes down, keeps going lower. It's very, very self-explanatory. I've showed you, here, I'll show another example just to make it really easy for people that are struggling. Trying to find a good example again. Right here, another inverse fair value gap. Boom, price breaks it, price goes back into the fair value gap, and then keeps going higher. Now you're probably like, well, how do you find the right fair value gap? How do you find this? How do you find that? It's called market bias. You have to have your daily bias every single day in order to take the right trade. A fair value gap is just one confluence for the entire day. That's all it is. So if you don't have your market bias right, or your daily bias, whatever the fuck you want to call it, a fair value gap is a fair value gap. It's only so strong if you use it the right way. But if you're using it the right day, it's going to be correct every single day. But if you're using it the wrong way, because your daily bias is wrong, you're probably going to get fucked over 99% of the time. All right, let's try and find another example. Let's do Thursday, sure. So market opens. All right. Trying to find an example. Cool. So right here, right? We have two things that happen. So if your bias was bullish, which it should have been. I'm not going to go over fucking daily bias because that's not what we're going over, but it should have been bullish, right? What happens? Price disrespects this inverse fair value gap, or this fair value gap, this bearish fair value gap, creates a bullish one, creates a BPR. Cool. What is a BPR? You just put this right here, and then that's your BPR. And then guess what? Sorry, I'm kind of going fast, but we have another one right here. Inverse fair value gap. It gets inverse, price goes back into it. And now you're like, cool. Which one do I take the trade off of? Whichever one it goes in. So this BPR is a lot stronger confluence. So you're just going to get rid of this inverse because the BPR is just a lot stronger with getting the right liquidity. So then what do? You just wait for a 1 minute break of structure. You enter what's a break of structure. Went over it in my last video. I'm pretty sure. I'm not really positive. But then break structure right here. Up candle, down candle. Boom. Take the trade off of this. Where do you put your stop loss? Below the inverse fair value gap, or the fair value gap that was created. So it's going to be below right here because it's a BPR. So then you're going to put it below whichever one is lower. And this candle that created this fair value gap that got ran through. And then this one, which one's lower? This one. So you're going to put your stop loss right there. Cool. Then what are you going to do for take profit? Say you just put it right at these highs, right at market open. 1.27 risk to reward ratio. Pretty shit if you ask me, but guess what? It's probably going to work. Boom, price goes lower, fills the BPR more. That's why you don't have your stop loss right here, because then you would have gotten stopped out. Right? Right. Price goes higher, lower. Shit, this trade might not even work. Oh no. This trade might not work. Gulp. I'm just gonna cut it. No, that's okay. Because sometimes the trades don't work. But this would have been a trade that you would have taken. And yes, it would have been losing, but it would have been a trade. Can't win every single one. I thought that one was gonna win, but it's okay that it didn't. I thought I heard a bird. Anyways, let's go over the trade that I took yesterday. Because yesterday I took a winning trade, so might as well go over a winning trade with fair value gaps. Because if you go over losing ones, no one's going to watch the video. God damn it. Don't click off. They work, I swear. I swear they work. I swear. All right. What happens yesterday? Bias was bearish. I'm going on NASDAQ. Bias was bearish. Right? Right. So I took... Oh, I am on the complete wrong day. Wow, I am just really fucking up. I'm not cutting this from the video either because you guys deserve to see me fuck up, I guess. I don't know. All right, here it is. Here's the trade that I took yesterday. What happens? Price goes into this fair value gap right here. Price gets out of the fair value gap, but then what do I see? I see this 1 minute, other 1 minute fair value gap. So, and guess what? It's a BPR. Price disrespects this BPR. It's not really a BPR though, because never mind. Price, it's not a BPR. It's just another inverse fair value gap that was created in a bigger fair value gap. Fair value gap, fair value gap, fair value gap. Holy fuck, can I stop saying that fucking word? Anyways, this was my trade. 2.1 risk to reward trade. And then guess what happened? Take profit. It worked. And guess what? It's just one of many trades that you could have taken. And you're probably like, well, what? There's a fair value gap right here. Boom, boom. And it got respected right here. And you could have entered for a long like this. Yeah, you could have. But then your market bias was wrong. Your daily bias was wrong. I'm not trying to change your daily bias. I'm trying to change how you look at fair value gaps, how you look at BPRs, how you look at inverse fair value gaps. That's it. So then price goes up into the fair value gap. Price disrespects this fair value gap right here. Fair value gap, 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 fair value gap. Anyways, we'll go over to Monday. It's a super simple confluence that is very easy for everyone to use. And Monday, what happened? What did I do? I took a trade off of another fair value gap. I mean, you guys saw it in the intro, but I'll literally pull it up on my phone of the trade that I took that I'm literally going to show you. It's right here. Hopefully you guys can see that, right? What did I do? We had another fair value gap right here. Price went up into the fair value gap. Boom. I got in way down here. I put stop loss right here. Now you're probably like, why the fuck did you get in down there? Disrespected it right there. Yeah, it did. But then there was this tiny little fair value gap right here. As soon as it got disrespected, I got in. If you guys know, you know. Everyone knows in my Discord. It's free. I don't fucking sell a course yet. I don't sell a course. I don't do any of that bullshit because I don't have time for that. And I'm not trying to scam you guys. I'm just trying to teach you guys how to trade. But these were my take profits. And what happened? Boom. Boom, trade would have won. So simple. Every single time, trade would have won. Because if you use it the right way, You're gonna win, and you're gonna win very fucking often. Just saying. So what happens? I get in, price goes down because price, like, I feel like Jose Cuervo, what? In the markets. So another fair value gap. They're a super simple confluence that can be used on stocks, futures, options, crypto, Forex. Yeah, those are the 5. And if you guys use them the right way, if you guys use them with your daily bias, you are going to be right 99% of the time. Not really 99%, because sometimes you're going to have fuck ups, but you're going to be right probably 80%, because that is my win rate. That is my win rate. My win rate is 80%. No, my win rate is 70 to 80% every month. I do have bad months though, and sometimes it's 50%. I'm not gonna, lie to you guys. But yeah, it's a super simple confluence. And it's a very easy thing to use in the market, and it's gonna level up your trading insanely well if you use it the right way. And today I didn't trade at all because of CPI news data, but I'm going to get this video out to you guys. Hopefully you guys enjoyed. Hopefully this cleared up some things and, revealed some secrets for how to use fair value gaps, because it's a super easy thing to use. And if you guys use it the right way, it's going to be super useful in your trading journey. That's all I got for you guys. That is it. Peace.